Gave them lots of excitement around that. Retirement income, we pulled 45,000 from 71 to 93. And then we have 1 million of retirement income. Death benefit was lowered because we didn't pay a lot of those loans back. We figured the calculation on that, which is still going to cover some of the estate taxes and other needs. Didn't want to leave a lot of money for the kids, okay? The last case study is really important to me. Having one child, started his plan at age 6. This is a phenomenal tool for having plans for grandkids and children. How many people in the room have children or grandchildren? Everybody, I'm sure. So they have lots of other things these days, video games and toys. Do they have the financial knowledge they need? I don't know what your folks taught you about money, but I think this is an amazing gift to give to kids and grandkids, and my 11-year-old now totally understands his policy. We have a grandparent taking out a policy on a granddaughter, age 2. So the insured is the granddaughter, which must be an insurable interest. The granddaughter is. The owner of the policy is the grandparents. Follow me here. And the beneficiary must, by law, be the parents. Okay, the parents sign off on the application. We funded the system from grandparents' money of $140 a month for 7 years. The parents then took it over. Follow me. The values were pretty modest at year 7. Death benefit started at $100,000 on a 2-year-old female. That's what they wanted based on their budget. So these solutions are not cookie cutter. It's very custom designed based on your goals and concerns around money. And at age 20, we had $34,000. So this is a 20 pay. The grandparents and parents decided we're just going to throw money in for 20 payments and we're done. We continued paying the premiums for 20 years. Cash value at age 65 based on the current dividend of 6.81% is $562, and the cumulative outlay in this machine, this engine, was only $33,000. So when I ran the math and the ROI on that, with a death benefit age 65 at 1.2, we came in at 24.9%. Now for adult plans, you're not going to come in with that, but for these kids, if you start young, these kids are going to have amazing ROI on their plans because they're starting now. And it's amazing that you can give them this opportunity to finance their school, their cars, their emergencies. They won't go into debt coming out of school now. They'll have a place to put their money back when they go to university or college and have money returned to them to buy a condo when they're finished paying their loans back. Teach them to be disciplined and educated about money. Again, no plans are alike. The end of the day is we're all about helping everyone understand what's going on in your life financially, what are the concerns and goals you have, and understanding how this concept can use now and obviously down the road. So we wanted to do a quick presentation because there's another one coming up here in a minute. So before we do that, any questions, thoughts, comments that you have? The Bank on Yourself concept, again, is a powering idea of using a dividend-paying whole life insurance contract to summarize. That's going to give you guarantees, predictability, safety, options, no hassles. Be your own banker. Again, it's not get rich quick, it's get rich steady. You're not retiring today, some of you are, but at the end of the day, you've got to realize that you have a long life here, and do you really care if you're getting 6-7% today? Or do you really care? I don't. I know later on I will. But I know in my heart that this money is there for me when I need it. And every year I get a dividend and I get another statement. I'm excited. I open more policies, as do our clients. So pretty cool. I mean, I'm 5 years in this business. I got in because of this reason. And you know, I'm passionate to teach Canadians about this, how they can back their life. So you guys have been really, really excited about this and been participating. This gentleman over here has been participating. So I'm going to get you a book. Awesome. And then this lady back here. Awesome. And who else was participating a lot?
Can I ask you a question?
Yes. Q&A. You were. Go ahead. Question?
When you mentioned that you can draw money out for certain needs and then pay it back, and when that money is drawn out, what kind of do you have a limit of time that you need to pay it back? And you are, as you said, still gaining the interest of the plan while the money is out of the account?
Yes.
That is
So when you have equity in your plan, A whole life policy is like a mortgage. You guys buy a house tomorrow, you mortgage that property, correct? You make a mortgage payment to it, right? You don't have a lot of the equity yet, do you? As you pay the mortgage down, you have more equity. Same with this, as you pay premium, you have more equity in the plan or use of the death benefit. Now, if there's cash value there, you can do what you want and take it, and then you don't have any limits of when you have to pay it back or restrictions. You are the banker, so you make your own amortization schedule with the payment that you can afford, and you pay it back on your terms. If you don't pay it back, it's going to come off the death benefit later, or it may incur that the cash value would be lower than the loan amount. So it may lapse the policy, but we structure it so you take out enough so that doesn't happen. The cool thing is, they don't recognize the loan, you're still getting 100% dividend, even though you took 90% of the cash value. So 90% is what you're able to take with no questions, no hassles, no credit checks, anytime you want. I've done it. I've used it to do a renovation in our home. Our son goes to private school, so we use it for his education. We've used it for lots of things. So I mean, the main goal tonight, you guys, is get back with your advisors that you've come with or invited you. I'm also going to be here sticking around later for any questions. The main goal is just to kind of do some research, ask good questions, and read. That's what I did, is just do your own investigation, and we're here to help and answer questions for you. So fantastic audience, thank you so much.